Hey, what's good, guys? Welcome back to another trading video. Today's video, I'm going to show you guys what my trading strategy is and how I trade, how I place my entries. So without further ado, let's get straight into it. But right before that, if you guys really want to join my Discord server, it's just a community where I post my winning trades, people post their winning trades. You can also post your winning trades on there. Chat to other people. It's a new server, so it's not many people on there yet. But if you guys want to be a part of my journey, then go ahead and join that Discord. Link is in the description. It's the WAP link. It says become profitable. Just click that and it's free. And yeah, I'm closing my private mentorship soon, so get in while it lasts. I'm gonna close it. There's gonna be 3 different versions I'm doing, so it's 3 different projects. The first step of the private mentorship is going to close next week. So right now, or sorry, not next week, next month. So right now, get in while you can. Let's get right into the video. So basically what my strategy entails is so I trade NASDAQ, right? This strategy works mainly on CFDs and futures. I'm not sure if it works on forex because I don't trade forex. So what I do is I currently look at price and I'm like, okay, price is at 20,400 currently. I'm like, okay, we're pretty high. So comparing it to the all-time high was at 20,700. We're pretty close to it. And so what I do is I look at world news currently and look at financial market news. Bitcoin is soaring. You could look at any world news or current news within your local area, like North America region, and see how you can use it to your advantage. So that's step 1. Step 2 is understanding where you're at. So I'm at 20,000. Again, 400.9, and price is going, and sorry, now third step is where price is going. So I backtrack to, on the 4 hour, I always use 4 hours, backtrack to previous confluences. So I get my rectangle tool because I like to draw out my confluences. So over here we had an order block created, so I'm going to drag that out. This is my order block, and then we had a fair value gap in the same candle that created the order block. So this is my fair value gap. This is my order block. I'm going to color it differently. I'm going to color this yellow. So the fair value gap is yellow. The order block is gray. And then we can chart out different things. But for now, this is the 4 hours. So but what I see here is price failed to create a lower low than this. So it did not break structure. There was no market structure shift. So price came down, retraced back up, tapped into the order block, came back down. Because there was a market structure shift here, price made a fair value gap and it tapped into it, filled the fair value gap, went up. It did have a little bit of consolidation. So price bounced back and forth, but ultimately price never went below this point down here. So if someone has entered from here, they're still in profit regardless. It's making the lows are getting higher, so higher low, higher low. You know what I mean? So eventually price came up. Let's say people put their take profit up top here, or even like right here on top of the order block, they would have got their order filled. Price filled the order block completely, and once price filled the order block completely, then it dropped it down. Once it dropped it down, it created a market structure shift here. Okay, it shifted these other 3 points, but we're going to take the most absolute point of interest that it broke under. So it would be this point down here, and it did sweep liquidity. So this down here this was previous liquidity. So price swept liquidity down here. Okay, so just giving you guys a visual. Price swept liquidity and shot back up, meaning this order block was valid twice. This fair value gap was valid twice. The chances of it to become valid 3 times is very low. So price shot up, made an inverse fair value gap and a breaker block. So an order block turned into a breaker block. If you guys don't understand what breaker blocks are, right before this video, I uploaded a video called order blocks. So I'll talk about order blocks. You guys can go ahead and learn what order blocks are right after this. So or you can just like pause this video and go watch it and come back if you guys genuinely don't know what order blocks are and how to mark them. So anyways, moving forward, this became a breaker block. So the actual body candle closed above both fair value gap and order block, and we're gonna drop down to the 1 hour. So this is what I do. So after I've marked out all my confluences, I understood where the market is, I drop down to the 1 hour and I see again, where am I? So let's say I'm like around here, this area. Let's say it's Tuesday. I'm looking at the charts not at 12 a.m. but let's say I'm looking at the charts at like 11 a.m. or something, right? I'd see the chart price did close above. We get a fair value gap up top here. This is a fair value gap. This is also another fair value gap. We get a market structure shift right here. We get a liquidity sweep right here. This is a liquidity sweep. Also does count as a market structure shift as well. This liquidity up top got swept as well, and it closed. So it didn't just sweep it, it fully closed above. So we know that when a body candle closes above liquidity or below liquidity, it continues the trend, it continues the momentum going down or up. So because it closed above twice, we know that price is going to retrace down, buy at a discount, and then go back up. So this is what happened. With our inverse confluences, we can now use it to our advantage. So this is what I do. I wait for price to retrace, fill in this fair value gap, and these order blocks down here. I would enter 100%. I would put my entry right here. I'll put my entry on this blue candle, okay? I'd put my TP, make sure it's a 1 to 2. I'm good to go. That's literally how I trade. Next, okay, let's say I want to take a back-to-back trade. The second time you're trading, you can use, even the first time, you could even, depends what the scenario is. In my scenario, it would have been because this made an order block and a fair value gap twice in the hourly. I wouldn't take a trade using the hourly though. I would take the trade using 5 minute or 15. For the sake of this video, let's use the 15. I use the 5 minute, but it's both the same things, right? Both the same thing. So price came down, made a volume imbalance. So this is a volume imbalance, right? Price shot up, retraced back into the volume imbalance, down into the inverse fair value gap. We're still in it, we're trading in it. We get another market structure shift. We get a order block down here. So this whole move, so hold on. This move down here, so this is a fair value gap, this is a fair value gap, right? So we have two fair value gaps. Let's mark one of them out. We can mark out the most bottom one. Okay, so price comes down, taps in, continues going down. Let's say you put your entry like here, and you want to target the top. You would have gotten stopped out right there, right? So I would have gotten stopped out here, because if I want to go for a 1 to 2. But so how I trade is I use logic. Because we are currently in this fair value gap, huge fair value gap for the 4 hour fair value gap, right? I know that price can literally bounce anywhere between the top to the bottom of the fair value gap. So this is kind of wrong. Well, there's no really wrong way to trade, but this is just how I trade. I don't really put a stop loss when I trade confluences that happened before. I always trade stop losses when there's trades that are happening currently. The confluences that are data that's happening before, things like this happen, where you put your stop loss too tight and you get stopped out. So imagine this stop loss isn't here. This is how my trade would look like, basically. So it would go in drawdown essentially for a bit, but I would always end up knowing it's going to come back up because it's still filling other things previously in the fair value gap. Make sense? Price shoots up, hits our TP, and goes even higher. Okay, that's how I trade. As simple as it is, and it does seem as if I'm just looking at the history of the chart and being like, oh, you know, like what's it called, replay warriors, I guess you guys call it. It's not that, because that's exactly how I trade in real time, and I can prove it to you guys because I do live sessions. So if you guys want to see my live sessions, subscribe to the mentorship, and I do live sessions with you guys, with my students. All right. But anyways, this is how I trade. This is my strategy. It's been working for me. I've been getting 100% win rate for the past 6 months. I don't always consistently get 100% win rate, but for the past 6 months, it's been at 100%. So thank you guys for watching, and that's basically it. I'll see you all in the next video. Ciao.